Hello, today we're going to be taking a look at Verizon, ticker symbol VZ, and currently we are looking at their free cash flow. As you can see here, in 2020 it was 23 billion, 2021 it was 19 billion, 2022 it was 14 billion. In the most recent quarter ending June 30th, it was 7 billion. And if you look here at the year over year, 6/30/2022, it was 7,174,000,000. So it did increase. So that is a good thing for people who are investing in Verizon right now. But today we're going to try to determine a decent price to get into Verizon, and if you want to look into it moving forward, because they do have a considerable amount of debt. So we're going to go ahead and look here. Since 2013, you can see they had 22 billion in annual free cash flow. Then it decreased, and then it went back to 21, and then it really decreased in 2016, 2017, and then it's been fairly steady since 2018. I would say, just in good numbers overall for a company. But like I said, they have a lot of debt, so that's something that we need to consider. Can't just look at their free cash flow, because that free cash flow is very alarming compared to the amount of debt that they have. But we're going to go over here to revenue. And if you look at their revenue, it does continue to increase. As you can see, only a 0.5% increase year over year, at 135 billion for the trailing 12 months. Their most recent quarter, they did decline, so that's something to look at. See right here, compared to there, it declined. From March till now, it also declined. So it's something to take into mind. 2013 revenue was 120 billion. Now it's 136. So it has continued to increase. We're going to come to their shares outstanding. They're currently increasing year over year. You come down here, you can see when it started to happen, about 2021 right here, and then they've been steadily, slowly increasing a little bit. Not a lot, like very minimal, but like I said, it's still an increase, as you can see right here. Their EPS, we're going to go ahead and look at it over the last trailing 12 months. $5, which is a 0.4% increase year over year for the last trailing 12 months. Net income also increasing. It is up to 21 billion, 1.13 year over year. We're going to come to their assets and liabilities to see their total assets. We have 379 billion, a 2% increase. How about total liabilities? 283, only a 0.23% increase year over year. So they do have more assets than total liabilities, but then we're going to have to divide that by outstanding shares to get our NAV value. Their long-term debt is increasing 1.24% year over year. It is now at 137.871 billion currently. So they're paying it down a little bit, but not fast enough. Because as you can see, you come over here for their years. Look, 2013, 89. 2022, 140. Huge increase. As a lot of it has to do with 5G, and then whatever they're going to be calling it going forward. I think it's 10G, but we're not there yet. But we don't even know if Verizon will be around to win that game. I mean, they'll be around, but I just mean like to win the game, because they have an extreme amount of debt, and there's other players already in the ball game for 10G that don't have debt, like Verizon and AT&T. So we're going to really need to give ourselves some margin of safety if we're going to be investing in Verizon, because that debt is just too much. Because if you look at their cash on hand, look at that. Cash on hand, only 4 billion. Yes, it's doubled since 2021, but 4 billion cash on hand. That is not that good compared to their long-term debt. Um, so yeah, let's get down into it. As you can see, their current price, though, their all-time high was $53 on December 3rd, 2020, and their 52-week low now is 31.25. So that's way off their all-time high. We're going to come over here to our discounted cash flow calculator, and our discounted cash flow calculator, we have a 0.5% growth rate. We also have a 10% discount rate, or perpetuity rate of 2%. Outstanding shares for 1,213,000,000. We get a discounted cash flow price of $40.44. For a company like Verizon, I would use a 20% discount rate to bring us to $32.35, which is a little bit under their current trading value. We're going to go ahead also look at a dividend discount model. They currently pay $2.66 annually. They just did have a small increase, so the growth rate, we're using 1.9 0, which is around where they're currently growing. 10% discount rate brings us to $33.46. Their current trading price is $33.28. With a 10% discount rate, we get $30.12. 15%, $28.44, and 20% discount rate, we get $26.77. We're going to come to our NAV valuation, our total assets that we found, our total liabilities divided by outstanding shares. We get $22.81. So, if they fall around to this level, they would be around book value or the NAV value. We can go ahead here, and also we can do a Benjamin Graham just because we know the EPS is at 5. They aren't growing very well. They usually trade around 12 PE. So, not a 50% growth rate. Oh, yeah. Numbers matter, people. So, 0.005 is going to give us that 0.5% growth rate. Corporate bond rate, why does it keep changing it to that? We don't want to change it to that. We want 0.5. Not 0.5 either. 0.005. Maybe it just won't let us do that. Okay. I did it again. Okay, yeah, it has it. It has it correctly. So we're going to use that PE of no growth. We're going to go ahead and do... it usually grows around 10. I'm sorry, we wanted to put it at 8. And then that'll bring us to $44.03. So you want to give yourself a good discount rate for a company like VZ, because they have all that debt that we're talking about. But I wouldn't use the Benjamin Graham for Verizon, especially with all the cash that they have. We could probably put the corporate rate at 5% because we're currently not at 4% for bond rates. So, yeah, I probably wouldn't use this model for them, but we can go ahead and put it in there and then give ourselves a margin of safety. We're going to have $44. I messed that up. So the dividend discount model should be 33.28 or 33.46. 33.46. Put the Graham model. Also, that would give us a $38.73 for a value.